is that as the labour force declines in size, or percentage of people involved in the labour force, the government takes on more debt to offset the growth. This is what it's all about. This is the big economic mess we're in. It's a mess created by demographics that I've talked about before, massively driven by total liquidity. This time it's about 87.5% correlated. Reason being, there's a faster adoption curve, exponential growth that happens in Bitcoin or all cryptocurrencies. So that's what lowers the correlation, is in fact the outperformance. But anyway, liquidity drives everything. The breakout usually ushers in the banana zone. So we've had the boring period. It was about 8 months long. It was a nice, orderly correction. So what lies ahead? The banana zone. The fabled favorite yellow fruit of all of us. The one where our hopes and dreams are all in it. Let's talk bananas.
Want to crack the code to explosive crypto gains? In today's video, Raoul Pal, with his 30 years of experience, reveals insights that the mainstream media won't tell you. From uncovering the secret banana zone to timing the altcoin season perfectly, Raoul's strategies give you the edge to stay ahead of market moves. Stick around, because this information could change how you navigate crypto forever.
Remember that magic formula that I've talked about in the past, where GDP growth equals population growth plus productivity growth plus debt growth. Okay, got that? Well, this is the important bit. The labour force participation rate in black here has been falling for a couple of decades. That is because the population is beginning to age, and so less people are in the workforce. Now, you can see in pink, it's the birth-deaths rate that is actually driving this. So as population growth has been slowing, the workforce slows over time as people get older. Okay, so that's pretty clear. An old population, however, because of the magic formula, less people in the workforce means less GDP. So a trend rate of GDP has been slowing. So the economy's been slowing over time. So what is it? It's that same labor force participation rate, but this time it's against US government debt as a percentage of GDP. Now it's inverted here. And what it basically tells you is that as the labor force declines in size, or percentage of people involved in the labor force, the government takes on more debt to offset the growth. This is what it's all about. This is the big economic mess we're in. It's a mess created by demographics that I've talked about before. This chart is incredibly important. Now, look at the little divergence recently where government debt has been growing, but the labor force participation rate hasn't. That's the recent influx in immigration in the United States over the last 2 years, where some 6 million people or so have immigrated into the US, and that has kept the labor force participation rate higher, offsetting the retirees. But that's unlikely to continue, particularly with the new government. So what we'll see is the labour force participation rate decline and government debts keep growing. Okay, so we've got all of these massive debts. I've talked to you about the everything code. The everything code is the servicing of these debts by using liquidity. So liquidity is the debasement of currency. So to service these debts, they print more money to service them. It's as simple as that. That is the game we're in. That is the everything code game. Liquidity keeps growing. That's the debasement of currency. It's growing at 8% a year. That means the value of scarce assets, S&P 500, real estate, gold, should grow at about 8% a year just because the currency is being devalued. Now, there's another maybe 3% inflation rate to add to this, so 11% is your hurdle for your future self not to be getting any poorer. And most assets just don't do it. But you can see how important it is by this chart that you should have seen before, which is the chart of the NASDAQ versus our global macro investor total liquidity. This is the total liquidity around the world. That's government liquidity, central bank liquidity, and private sector M2 and other measures. So it's the total amount of money printed by the system. And what happens is the NASDAQ is 97.5% correlated to it. That's incredible. The other extra bit that's not correlated that you're seeing now is the secular growth in technology. Because technology is a secular trend, because tomorrow is more digital than today. And obviously Bitcoin, massively driven by total liquidity. This time it's about 87.5% correlated. Reason being, there's a faster adoption curve, exponential growth that happens in Bitcoin or all cryptocurrencies. So that's what lowers the correlation, is in fact the outperformance. But anyway, liquidity drives everything. Now, since 2008, everything has become cyclical, because in 2008, every central bank around the world reset interest rates to zero. It was like a debt jubilee. You don't have to pay your interest, so the world could kind of recover from the debt blow up of 2008. And for about 10 years, we had zero interest rates. And what the governments did is they reset all of their debts to between 3 and 5 years.
Raoul dives deep into how the crypto market operates under the radar, driven by forces that most people overlook. He explains how the banana zone isn't just a fun term. It's a sign of exponential growth when liquidity and inflation conditions align perfectly. Then, he goes into how altcoins react to economic cycles, emphasizing that the biggest returns often come during the final stretch of the 4-year cycle. Understanding these patterns can help you time your investments and maximize returns, even when everyone else is getting caught up in the hype. Stay tuned for Raoul's breakdown of why the next altcoin season could be one of the most explosive yet.
That cycle has created a perfectly cyclical business cycle. The ISM, the Institute of Supply Managers survey, what we've got here is in black is the current cycle, which is it's currently at its lows, but the forward-looking is actually just the previous cycle moved forwards and inverted because it keeps repeating the same cycle. So that same cycle is repeatable and understandable and forecastable. Sure, the wiggles may change, the direction will be right, and it's driven by this. This is the distribution of debt in the United States. If you look at the first two boxes, well, that's what 72% of the entire debt structure is 1 to 5 years, which is what I talked about before. This is what's causing the cyclicality that you see in the economy and these 4-year cycles. So because they're using the liquidity to manage the debt, the rollover years, which tends to be this yellow and the kind of weird peachy color, the summer and fall, those are when the peak debt rollover happens. So they add lots of liquidity. So if you look at that, you can see the liquidity piling into the system as they start rolling those debts over, and they need to print more money because they have to issue new debt to pay the interest on the old debt. Sometimes they use a central bank balance sheet, other times they just create liquidity, and it's done on a globalized basis. Right now, China's the big liquidity driver. And then you get those blue years, which are the winter years, when they start withdrawing liquidity because they don't need to service the debts because there's no debts around those periods of time. So that's why we get this cycle. And this cycle creates the Bitcoin cycle. It actually corresponds with the presidential election cycle and also the Bitcoin halving cycle. They're all those summer months. The summer months tend to be pretty strong. You can see the previous examples, 2012, 16, 20, all good months, all good seasons or years. And then fall tends to be very strong. The fall in 2021 was still strong, but it had a stunted cycle because liquidity was starting to get withdrawn because they put so much in. But if you look at 2017 and 13, they were gigantic. So the fun is yet to come. When you look at it in year-on-year terms, you can see the cyclicality and how related Bitcoin is to global liquidity and how the seasons dictate that. So what we're looking forward to is the big rises in price ahead. The business cycle is starting to pick up. So current ISM today is very lackluster. It's almost recessionary conditions, which is why many of you think we're in a recession right now. The forward-looking indicators are exploding higher, meaning we're all going to have some more money soon because the economy is going to be working better, our businesses will run better, our earnings will go up, and we'll feel a bit better about ourselves. That's what lies ahead and is at the essence of what matters in the banana zone. And you see the financial conditions index, which is our lead in all of this. It's comprised of oil prices, the dollar, and rates, is also suggesting that ISM leads, and it's a pretty good indicator. So that it leads ISM, and by 9 months. So we kind of know the business cycle is going to be going up at least for 9 months and probably a lot longer. What happens normally is around the Bitcoin halving or around the early part of crypto summer. Now, we're not talking about summer as in actual seasons. We're talking the 4 seasons, which correspond to each year. The early part of the year usually is something called the boring zone. So it starts strong and then sideways corrects after the halving for an extended period of time, and then eventually begins to break out. The breakout usually ushers in the banana zone. So we've had the boring period. It was about 8 months long. It was a nice, orderly correction. So what lies ahead? The banana zone. So when we look at halvings, from the halving, you can see what happens until the end of that year. So we had 2020 at the top was very strong. We had another strong year in 2016, and 2024 we're a bit below par right now. But don't worry about that because you'll see it in context of everything else. We should still see extremely strong price rises. The US election, well, that's a key time for this because after the election, we get the banana zone. There's often liquidity being injected into the system, and there's also a shared sense of optimism that drives prices higher. We are just starting that now. At time of recording, the election was 2 days ago, and already crypto prices have started their explosion into the banana zone. Bollinger Bands are a measure of volatility or lack of volatility because Bitcoin was ultra low volatility recently. And that's really interesting because every time you get there, when you get these kind of low volatilities, you tend to get large price rises. And we've been following that kind of price action. So you tend to get 200, 300, 400% rises over the course course of 6 to 12 months. So that, I think, is another interesting signal. So suppressed volatility usually leads to hypervolatility. Also, Solana exhibiting extremely low volatility. That box in the right, it shows you that every time we've got to these levels, we've seen everything from a 25% rise to a 520% rise in 2 to 3 months. This is bananas.
And that's the playbook for understanding crypto markets like never before. Raoul Pal's decades of insider experience reveal exactly how and when to navigate each stage of the cycle, spot those parabolic banana zone moments, and time your altcoin moves for maximum gains. This isn't just theory, it's the roadmap that's guided top investors for years. If this video gave you a fresh perspective and an edge in your crypto journey, make sure to like, subscribe, and ring the notification bell so you don't miss out on more game-changing insights. Share this with someone who's ready to take their investing to the next level, and we'll see you in the next video, bringing you even more exclusive knowledge and strategies. Stay tuned and keep leveling up.